Good morning. Good morning, everybody. Hopefully everyone had a great holiday with the family. This was probably one of the better Christmases for our family in quite some time. So, yeah, that was fun. And yeah, hopefully things went well for you guys. We'll get started here in just a little bit. In the meantime, just gonna sit here and enjoy my coffee. Lost my glasses. I don't know where they're at. I'm just trying to look for them this morning, but I don't know what I did with them. Holy smokes. Silver and gold are just going absolutely bonkers. Well, silver more than gold, but you know, all good. So yeah, for those that maybe come back and watch the stream this a little bit later, just know that the market is in a buy signal. We're still long bias the stock market. So until there's a reason to not be long the stock market, we will be long the stock market. I'm still holding swing long a UPRO 3x leverage ETF, 3 times the return of the stock market. So as long as the market continues to go up, you get 3x the return of the market, which is good. It's obviously not the most leveraged product, but there's some leverage to it. So yeah, that's going well. Guess there's not really a whole lot more to say on that front, other than we're just long, and probably going to continue to be long. So yeah, anyways, hopefully you guys had a good Christmas once again. Hopefully you guys got something maybe planned for New Year's, and if you don't, that's completely fine. Last year I just slept. Didn't do anything. So that's cool too. Silver and gold are going on a historical run, you could say. We will be looking for silver to hopefully get into, now we're looking for silver to get to maybe 85, 70, 75, $85 a share. That would be great. Right now, silver is coming into a very big level, right about $68. $68 for, well, hold on, let me rephrase that. I look at SLV. I look at the ETF SLV, very commonly traded and held ETF. The spot price, I do believe, is definitely different than that. Obviously, it's different. That I don't actually know off the top of my head right now, so let me look that up. Silver spot price. Maybe. All right, that is, so silver is at 74 an ounce. Wow. What are the silver futures? It's been so long since I've traded that. /SL or SI. Maybe? Yep, /SI, baby. So that's going to 75. So that's hit +2. Yeah, so right now the silver futures market has hit 75. SLV has hit about 68 there, which basically means we're coming into some resistance right now. And when I say we're coming into some resistance, it's standard deviation resistance. So if you end up seeing silver kind of have a red day here, maybe pulling back, which I know it already has a little bit, that wouldn't really be a surprise. That would be kind of normal. we are, but again, we're getting up to what's now called +2 standard deviation on silver. Regardless if you're looking at silver futures or whether you're looking at the silver ETF, etc., we are now getting into prices for silver that are slightly however you want to think about it, I guess, but it's +2 standard deviations from the mean. Like, that's the most accurate way of saying it. You could say it's euphoric, you could say it's kind of euphoric, not the most euphoric, and explosive, I mean, whatever, but, you know, one way to certainly look at that and define it would be +2. Like this morning, exactly, it is at +2 standard deviations from its 1 year historical mean, right? So that's like saying, hey, I'm going to take a rubber band, and it normally is like this, and then I'm going to stretch it as far as I possibly can, right? So how far can you stretch the rubber band away from its traditional average or mean before it breaks? That's the concept. Can you stretch it 2 times, 3 times, or 4 times its typical diameter or circumference, if you will, before it breaks? So right now we stretched the market 2 times away from its historical average, 1 year average, 1 year trading mean. Do we take it 3x? Do we take it 4x, 5x? I don't know. We'll see just how euphoric the market wants to be. That's the point. Euphoria sometimes knows no bounds, hence GameStop, right? So we're just gonna have to see. No one truly knows, but yeah, I would love to see silver and what have you get up into, if we're looking at the ETF, I'd love for it to get up to $76. If we're looking at futures, I'd love for it to go to 85, 90, maybe 100 now. It would be super impressive to see that all in one shot, but yeah, I would really like that. So yeah, I still own gold and silver. Again, like I said, I sold most of my physical gold and silver. I still own a decent amount of paper gold and silver. You know, it'd be heartbreaking if I've sold way, way, way too soon, but I don't think I did. I mean, hell, I've held this stuff for like 7, 8, I don't even know how many years now, a long time. I just don't really count, but it's been +5 years, so, you know, one's got to ask themselves, what's the point of owning something if you make money and you're not gonna take the money? I don't know. I guess that's the opposite of Warren Buffett, but this is also the precious metals market, so it's a little different in a way. Obviously, if they reset back to the gold standard and it goes $10,000 an ounce and all the stuff people ever talk about, then yeah, I'd be relatively upset. But, you know, is that going to happen this year? Probably not. Would it happen in 10, 12 years from now? Maybe, maybe not. Who knows? So, anyways, that's gold, silver. Fun stuff. Bitcoin doing exactly what we said it was going to do a couple weeks back, which is it's not going to break that low that you guys see here. Well, the one person that's watching the stream, so whoever you are, cheers, have a Merry Christmas to you. But anyways, yeah, so look, gold's not going to break that low. It's just not going to happen for the or gold, Bitcoin. Bitcoin's not taking out that low for the moment. What's going to happen is pretty much what we said. It's going to stay down here. It's going to do low-hanging, chop, fly, piss off a bunch of people, and then it's going to bounce. And then what it's going to do is going to bounce, and then it will attempt to do a lower high and then go into a further bear market. Meaning we're not going to do the two-step Magoo, right? So the two-step Magoo would be this and that, right? That's a two-step, a Euro step down. We're not doing the Euro step down yet. We're going to do the move up, and then most likely we would do a Euro step down, which that drawing is not happening that deep. But so right now we're just not going to take out that low. And if we do, then whatever, unsubscribe from my channel. Don't really care. But it's just not going to happen. It's going to bounce first and then, or do at least attempt some bounce first. The market is normally not that nice to short selling activity, in the sense they're just going to let you slide the market continuously down. All right, now as it relates to the actual market, Market is still in a buy signal. Again, still long UPRO because there's no reason to sell it. There's no reason to be bearish the market. So we will pop on SPX, and real quick, again, and actually let me take off this. I don't want the standard deviation channel anymore. Remove that. Sweet. All right, so now do remember, let's actually shrink this just a hair. There we go. Again, your long signal for the market was right there. That was the long signal. Since then, market's blasted off. So currently, we would be on we are now on day 7 of the swing long. So basically, the market and the algorithms have been swing long, force long, long bias trend for 7 days now. And there has been no signals in the market that would change that, right? Well, I haven't actually looked this morning. Let me double check. Interesting, actually. Oh, that's VVIX. So let's see. But still very interesting. Huh. But still, no signals to truly be bearish yet, the market. Now, let me just use my brain for another second or two before I start spieling a bunch of randomness. Yeah. Yeah, no reason to be bearish. Not yet. So, you know. But I will bring it up real fast. Volatility index. We will start in this upper spot here. So, obviously you guys know that right there, where my circle is doing, that was our breakdown of the VIX in the market. Since then, it's been a downtrend. When it gets over this yellow line, it would then be back into a potential uptrend/uptrend. So that's when fear would start increasing in the market. So the way we would discuss that here on stream is the market is currently not fearful. If and when it does become fearful, you would then be more likely to see the market have harsher pullbacks. Won't necessarily mean it's in the trend of the market goes bearish, but at least we now have some sort of signaling on the fear index to be more aggressive on pullbacks or bearish movement down on pullbacks when fear increases. Fear will increase when and if the market gets over the price of $14.48 as it sits this morning. That price point will not be the same by tomorrow, okay? But in this moment, that's what it is. So then when we go and we look at the pre-market chart, because we're in the pre-market session, we will see that the market is still not over that line, nor has it tested that price. So that leads us to believe 3 things, essentially. 1, the market would have to be above to be breaking out fear. Number 2, it hasn't tested the SMA. So we have gapped up this morning, and either the market just has to continue in the downtrend, or it's going to go back up to that level. All right? Because before any market can go from a downtrend to an uptrend, it must breach and go above that level. So to go into an uptrend, you would first have to potentially back test, because if you get the point. So either way, pretty much what's on deck this morning is as far as the VIX goes. Oh, dang it. Yeah, well, as far as the VIX goes, fear is not broken out. Is it possible that we take the VIX up to that level? Maybe. That's something I'm kind of considering. Let me look at this 15-minute real quick, because that's going to also play a big role. There we go. So this is kind of the problem now is that I see is our two most relevant simple moving averages, aside from this pre-market 30-minute, but I'm not going to talk too much on that, is our two, basically the end zones. Currently the end zone of today's volatility market would be 1380 and 1450, and we're currently priced right at about the midway point. So basically, whatever way the VIX really wants to move, that's fine. But it's going to be most attracted to the price of 1380 and or 1450 for the time being, arguably. So that being said, the market on the VIX is in a downtrend. The market's in an uptrend. So I'm going to stick in that direction until I think I shouldn't be, right? So therefore, I'd be looking for the VIX to come down to the price of 1380. Also looking for it to come down to that SMA right there. So those two yellow lines on the downside would be two price points I'd rather see the volatility index go down to, as opposed to seeing the volatility index break up to here. Because if the volatility index goes for the back test up to here, then that means the market's going to have a little bit of selling pressure. It's going to slow down its long, and that's worst case scenario for everyone's portfolios, generally speaking, or here on the stream. So we're just looking for the downtrend to hopefully remain on the VIX, and that would probably be better for the market in terms of helping the market sustain its highs or continue higher, et cetera, et cetera. All right. So for the two beautiful souls in here this morning, cheers, welcome. Santa Claus surely came and delivered on the Santa Claus rally. So that was fun, or is fun. And now there's really, like I said, there's nothing to really do. I mean, there's always something to do in the market, but as it relates to this stream and what we're doing here, I mean, again, we've been long for like, well, it's going to be 7-8 days now, so we only will go short the stock market when it turns into a sell signal. And so basically the next thing we have to do is just wait for the next move, which can get a little boring, if you will. But that's just it. Again, we look for the transition of the markets to positive to negative, and that's how we pretty much dominate the trends of the market. And right now, the trend is positive. So we aren't really supposed to be bearish. The long bias signal for the market started 7-8 days ago, so we're not at a signal generation point for the market, right? So you can't be bearish. You can't really be buying new longs in theory because you're not at the signal generation for a long, so you're just in the waiting period. As it relates to this system, right? Now, day trading, there's plenty of things we can do, and plenty of things you can use for trades, right? And, you know, so that's all as it relates to the system. Yeah, there was maybe one penny stock I liked today, but then my Roth IRA wouldn't let me buy it, so figures. Actually, that one doesn't look too bad. Oh, Diamond, thank you. Thanks for tuning in, brother. Or sister. Don't really know, but thank you. Yeah, no worries, you know. Just helping save a couple souls in the market along the way. Jay Smith, appreciate you, brother. Thanks for tuning in, hanging out with me on this lovely Friday. I got so much stuff to do right now, I'm not gonna lie. I'm starting to feel a little pressure, a little stress, but that's usually when I operate the best, is when I'm under a little bit of pressure and some timelines, deadlines, if you will. But yeah, I gotta be out of this house by January. Well, I have to be out before January 10th. I have half of the garage finished. I have to insulate the ceiling. Then I gotta hang the drywall on the ceiling and the walls a bit. And then I got to mud it. Probably not going to get to painting it because that can wait till it's got to wait till it gets warmer. It's too cold in the garage to paint. It's not going to be good to do that. So, but anyways, I got to finish a garage here. I got 3 levels of floors getting installed at another house down the street, which granted I would have done myself, but I just don't have the time right now. Yeah, carpet's clean, couple of the random things done, then move the entire house. So that's all going to happen like now. And then I got an HVAC job going on at another house. Like, man. Then I'm supposed to be doing gutters and trimming a tree at another house. Basically, what I'm saying is have rental properties. It's fun, you know? You just basically always have something to do, you know? But to be honest, it might sound like it's a bad thing. No, I really do enjoy it. I grew up painting cars. I grew up working on cars. So basically, so basically I got my first things that I did was all manual labor and somewhat, skillful work, if you will, while painting. Working on cars. So, my heart always itches and burns for a little manual labor type working besides just clicking a keyboard and investing money somewhere. So I do always have the itch and the burn for a little bit of a manly work, if you will. Though these fingers are strong from clicking these keyboards all these years, I mean, man, I'd hate to be the guy that gets in a finger fight with me, you know? He's bear claws. Just kidding. But anyways, we'll yeah, we're just hanging out, guys. I mean, it's Friday after Christmas. Wow, yesterday really was Christmas. It just does not seem like it. So, yeah, I mean, guys, really, I when we're on this stream, I really wish I had, more action to give you. I mean, of course, I can give you a bunch of action, but that's going to be, higher risk trading stuff, and then the delay from the YouTube stream. I mean, it's really not a smart thing for me to really try to do all the time for you guys. But the safe things I can, being swing long the market for 8 days, giving the buy signal a couple, that's something safe, reliable that, we can discuss here on stream. And short-term trading stuff can be, safe for discussion. But again, when there's the delay in the stream, and if you try to follow those things, again, it's really not a smart thing, in my opinion. Not that it's not a smart thing. It's just harder. It's just significantly harder, right? I could sit here and I could help you guys understand the SMA system, keep you on the right side of the market now for 8 days in a row. No, zero thought, right? There hasn't been a day over the past 8 days where I've told you guys to be bearish. That, right? Think about that. It's not I would say it's crazy, but if we were to go back for 8 days of this stream or so, 7 days, it would be long, right? Even today, not telling you to be bearish yet, because there's no signals, right? So, that's a really good thing, right? To keep an entire internet on the right side of the largest globally traded stock market for so far 8 days in a row. Right, those are things I like doing, right? What I don't like doing nowadays is, hey, watch this little short-term trade, and then it blows up into new highs. Just a scalp, right? There's nothing wrong with that. It's just going to be significantly harder, right? So for now, though, what I can say is we should take a little anchor VWAP and we should throw it on the bottom of this market like so. And pretty much what that means is the market will stay, as it relates to this strategy, right? The market is positive over the 30-minute pre-market volume today, right? Which basically makes that, number 1, a pullback target, number 2, a support, and 3, our trend over under. What does all that mean, Basil? That means that we're not quite bearish. If there is a dip, which many times there can be, that's going to be our target. And if it dips, that can also be our support. and then also a breakdown. I know that's a lot to take in, but as we kind of always explain, usually the good levels are all the same thing. They are a pullback target, they're a support level, and they're a breakdown level, aka inflection point, right? So I always end up doing this. I always end up drawing on the screen the basics of that, which is, this is our market right now. Up, it can keep going up, sure. It could go down, sure. But ultimately, the first thing we think of as it relates to this concept is it is up. And if the market wants to stall and pull back, that will be our target. And then this will be our support. And only if we start to take that out will we actually be nervous, right? So that's kind of, and obviously the pattern is never that simple, but, you know, to make it like a children's book, easy concepts, easy teaching, that's pretty much it. Granted, it never truly looks like that because the market could flash down in like 2 1-minute candles and it's, you know, but that's it. That's our price point of control right now this morning to a degree. So yeah, that's how we're going to roll with it. We do have a gap up, do we not? We do have a gap up, so we'll probably be looking at an SPX gap up Fibonacci trade. When I say that, it just, you know, when the market opens, we'll run a fib on the SPX. The gap up is not huge, so that means the 161 target for the S&P 500 is not going to be extremely far away. So therefore, my brain knows too much. It really does. But anyways, yeah, so when the market opens up, we'll have an SPX Fibonacci set up. And since the gap isn't huge, that means it's not going to be extremely far away. Therefore, many times it can be more easily achieved because the distance to cover is not so great, or not so far. So that we'll see in the next 2 minutes. So I'm just going to go ahead and go there so I can measure it right at the open. Actually, let me double check a couple other things that I might be missing. Ooh. Oh, man. It might have been. That is an algo candle. Huh. Let's try that. Do a 5-minute. Well, 5 minutes. Yeah, it's going to be the same thing. I'm going to go outside of it. Nope. 2, 6, 1. That'd be 3, 4. Good morning, Upside Investing. How are you doing? Wait, what? Oh, there it is. All right, so again, very, very small gap here on the... We already hit our 161 target too. So right there. So the SPX already gapped up. Well, it's opened with a gap up, if you will. So we've ran up 161. We've now hit 261. Just like that. Like I said, when it's a small gap, you're more likely to achieve that 161 very quickly because it's just kind of more like an algorithmic program, if you will. All right, so again, remember that our support trend over under is that VWAP. So we haven't quite hit it. Oh, yeah, we're close. So again, remember that red line right there, that would be the pullback target and or potential break spot. Let's go to the 30-minute so you can kind of see it a little better. Damn it. There we go. All right, so you guys can see that, right? So you remember how we added the VWAP and we said, hey, that's going to be our pullback target, probably. So there you go. I mean, I know we haven't hit it to the exact penny. We're 7 cents away. Is that the moment where you say that's how you predict the largest globally traded ETF in the world? I guess. All right, so our pullback target is hit. We've even dropped the VWAP down a little bit from there because it's obviously a moving target. So there's that. Now this is where our 1 minute or our little support area is at that arguably holds the market. There's the bounce. Well, one candle. We won't want to get excited yet, but so as you can see, that's their pullback target, and there would be the initial knee-jerk reaction of attempted support, kind of building that green candle there. Just like that, there's a scalp that so like you could have scalped that with futures, you know, you could do whatever you want, right? You could have scalped it with an option, you know, like that. All right, now the objective would be, does the market hold a support trend and do we continue higher, right? Because remember what we said, this is the setup. It's pullback target and potential continuation. We only get scared if we start to break it down. All right, so then when you zoom in, did you break it down? No, you just pulled back on a 1 minute candle down into the target and now you're bouncing it, right? But remember, you're not supposed to be able to predict how the market's going to trade and how the market's going to move. Remember, that's not possible. Just look for a bull flag. Remember that. Look for the bull flag, look for the bear flag, kids. Do not listen to weirdos on the internet that wear pink sweatshirts, okay? No, no, no. So that's how we've mapped off the short-term movement of the market so far. All of what we just did has zero to do with the actual system, which is the market is still positive, it is not negative, and the volatility index has not broken out yet. Let me check actually, hold on. So we are starting to see maybe a little bit of hedging for the market, which I could see why, but nothing crazy. Again, so it's really still a long bias market. The only thing I'm kind of seeing this morning is we're seeing the VVIX cross the 30-minute trend. This 30-minute trend is very downsided though, so but we are seeing a little bit of increased hedging. And what I mean by that is just that there's the VVIX is up, but it's not confirmed on the VIX, right? Right. Though there might be some anticipation of something to come, the VIX hasn't broken out. There's no fear in the market. So like we said before, the downside target for the VIX today is arguably going to be down to 1397 and as far as 1380s. Granted, you will need the market to keep going up for that to happen, blah, blah, blah. You get the point. But, yeah, there's no fear in the market right now, so I don't want you guys to be fearful and think you're supposed to be selling the market down or anything like that. And just like that, I mean, does it get... Can you predict it any better than that? Ladies and gentlemen, I mean, come on. I mean, I understand why YouTube does not want to put our stream on the front page of YouTube. I get it. I understand. I mean, like, believe me, I know. Because if someone can just hop on YouTube and tell you, hey guys, we're going to pull the market down to there, and you look for support there and you nail it to the exact penny, probably not what you want on the homepage of the internet. You probably want the kid on the homepage of the internet telling you to buy bull flags, because that shit don't work. Merry Christmas, everyone. Merry gosh darn Christmas. Ba-da-ba-ba-ba. I'm loving it. I mean, it's too much fun sometimes. Too much gosh darn fun, you know? Or maybe it's because... Nah, never mind. Yeah, who knows? You get the point. Good morning, Upside Invest and Jay Smith. Everyone, how's you doing? Oh, man, that's good. Good stuff. Oh, what do you know? My bank account's still not connected to this stupid platform. I mean, honestly. Someone's got to fire the person who runs that company. Nah, I'm just kidding. But seriously. What's a brother got to do to get his bank account connected in 2026? Or I guess still 2025, but you know. What's happening? All right, let's see what's going on here. All right, so what we ought to be doing is looking for the market to pull back to maybe the 1 minute bottom up volume weighted average prices if it's not already holding this VWAP. Yeah, so it's kind of a goofy setup here. Not goofy, but yeah, so these are our current supports, as you can see. Pretty much these blue lines I've added, those are our current supports. So you can kind of see from here it's a long move up, pull back, move up, hit VWAP, hold. All right, so only below that VWAP do we look to take the market down more. To the next one. And this is all very 1 minute micro trend systems. So, you know. So that's essentially, you know, kind of just like how we took the market up here. So just like this, right? So you see how we take the VWAP and we add it to that previous higher low dip, and that helps us build the next one up. That's the same thing we're doing here on the 1 minute. So the 1 minute, right? The 1 minute goes up, has a 1 minute red candle. That's a 1 minute red pullback. We take the volume weighted average price of that dip, and that gives us our future volume weighted average price support that we create the bounce on the 1 minute. So it's a fractal repeating pattern, if you will. So now what we would do, again, we would just take this VWAP and we're just going to move it to here, and or this green candle in here. And that becomes our next pullback target and support on the 1 minute, arguably. So remember what we said, that the VIX will be targeting down to about $13.95 here, arguably. So we're on the way to that target. We're kind of moving down. Ideally, we just need to see the market go up a little bit more. And if it does, then the VIX is going to come down a little bit more. We'll hit that target, et cetera, et cetera. That is not right. Okay. We got ourselves a busy stream this morning. Busy. Oh boy. All right, so remember how we said these 1 minute VWAPs would basically be the pullback target? We actually didn't even pull back to them. We got pretty close, kind of shying. Doesn't mean that it won't happen, but again, this is very 1 minute micro stuff. Sometimes, I mean, nothing is ever perfect, but you pretty much get the point. Yeah, so there's that. Good, oh, you already said good morning upside. Gotcha, gotcha. Oh, let's do that. Where's my phone? Dang it. Okay, I'll be right back. I get my phone for something. What was I going to do? That's right, tax. It's hard to see, but the new pullback on the 1 minute, new pullback target's down at about like 69125. When I say that, it's just, again, we're still, market's still moving up right now, but anyways. Yeah, I mean, so this is kind of a scenario where we are getting a few little mixed readings from the market, mixed signals. What I mean is we're starting to see some hedging, right? So look at this. So the hedging of volatility, or the anticipation there could be some unforeseen risk in the market, is increasing, right? So you can see that. See how the market is broken out over SMA, and this is green. Now, it doesn't mean this is going to sustain and it's guaranteed and whatever, but you're starting to read the story this morning. And the story is market's positive. Yes, it's going up. There's no fear in the market quite yet, but someone, somewhere, couple people, collective group, the market is starting to hedge for some potential upcoming risk, right? Now, but the market's going up. So again, and the reason being is because just because you see that someone's hedging volatility doesn't mean the market has to come down. Remember, markets generally start to sell off when fear enters the market. VIX is fear. VVIX is anticipation of fear, right? So there's a little bit of anticipation of fear that might come. But again, it isn't quite activated on the VIX because the VIX hasn't broken out, right? So we're kind of in this like, yeah, we want the market to keep going up, but it's also been going up straight up for so many days in a row that it's probably eventually going to have to pause or chill out. So what I think is we're kind of seeing the early signs of the market maybe getting a little bit exhausted on the way up. That's why we're seeing a little bit of hedging on the VIX, or sorry, the VVIX. So basically, which would fall into the line of is be cautious if you're trying to buy highs. There are some signals that we're getting that would be, to me, clear as day that you should be chilling out on trying to just buy the market straight up long, right? Which, I wouldn't, to begin with, we wouldn't suggest that in the first place because the suggested long entry point would have been like 7 days ago. So obviously we're not saying buy the market up. It's just if you're behind the scenes, behind your computer right now going like, I'm going to buy a bunch of calls. Maybe not, right? Maybe not. So we're kind of seeing, maybe a little bit of some transitioning happening in the market from what it's been over the past week of just straight pumping. So, of course you ran into a technical issue. Of course, stupid frickin' platform. Gonna lose it. Gonna lose it. Yes, Yeah, we might be seeing a little bit of a temporary kind of short-term top in action here on the market. We'll see. And there's, like I said, there's a little bit of that hedging going on. We haven't even reset. Let's see. Getting there. Oh, looky. Who would have thought a little short-term Toppy Magoo in the market? Oh my gosh. Get this kid a biscuit. So right now we're coming into the 1 minute volume weighted average price of today's long. So this is kind of one of those sketchy areas for everyone being long. If they don't hold that trend, they can kind of stop themselves out, as you're kind of seeing right there. Bang. Let's go, baby. Sometimes, it's just a little too easy. Not really. I'm kidding. It's not too easy. But, when you know, you know. So if you guys want to review why I thought there might, like, I mean, I didn't make it super, I mean, it wasn't just, I don't try to hype anything up. I just try to, hey guys, there could be some topping probably coming in. Why? Because I can see they're hedging volatility a bit. And then also, if you look at the target of the VIX, remember we were targeting down to that 30-minute there at 1396. And it pretty much held instantly. That tells me algorithms are kind of working something there. So the worst case scenario right now for the market on the long is that the VIX goes all the way up to $14.52. We could be looking at a pullback target on the NASDAQ down to the price of $623.58. That's an untested golden pocket area from today's algorithms. So we're arguably could very well be seeing the NASDAQ take out its current lows on the day and then fall to, like 623.55. That's arguably on deck, I guess. It could be happening there. For that to happen, we would really need some things to shake up. But either way, let me double check some other stuff. 15-minute trends positive. Did this change pricing? It did. So now the VIX is a little different. So $14.43 would be the upside 50 SMA destination for the VIX. We're going to need the market to continue pulling back for that to happen, but we'll see if we get it. But yeah, so I'd say probably the main takeaway right there about kind of seeing the potential for a pullback and all this is really just because for whatever reason, people are hedging volatility this morning and the market's going up. It's kind of one of those things you ask yourself, like, why are people hedging volatility, or why are people hedging for a potential risk or potential pullback, even though the VIX doesn't say it and the market doesn't say it? That means you could be running into something, or maybe just simply the fact the market's been going straight up for so many days in a row, maybe we're not meant to just keep going straight up again, right? So maybe we're going to have a more lackluster day where maybe we try to go up and then we keep knocking off the highs, right? We might not go into a full-on breakdown on the day, but the market is getting suppressed on its pops, right? And that's very well a signal that we're seeing right now because there's hedging of volatility, hedging of risk, right? That's what that is. The VVIX is the anticipation of fear can come. Fear may come. And now, what did we just get? We got a pretty decent pullback off the highs, right? So, right, it's all a storybook that you're trying to read every single day. And the better you get reading the storybook, generally the more you fall in line with the market. That's cool. Obviously. Again, remember, we do have the potential for the NASDAQ to go down to the prices of 623.55 areas, and the volatility index to arguably get up to the price of $14.42, right? Those are all possibilities. Obviously, it's not as easy to take out the low a day on the NASDAQ, but there is the possibility for it. That one I'm not as certain about, but I mean, I can't say it looks great to be extremely long biased right now with increased volatility, or well, hedging of volatility, and just having the market go straight up for so many days in a row. It seems a little debatable. Again, if we take out the low a day on the NASDAQ, we're going to shoot straight into like 62365, 62355, etc. Maybe even down to 62343, etc. Right now, we're not looking for the volatility index to get much higher than $14 and like 40 cents or so. Interesting. Well, market's still just basically holding above the previous lows there. The target on the volatility index, VIX, has now adjusted to $14.39. The NASDAQ is currently sliding down a little bit right now. Again, if we can start taking out 623.93 to the previous low of 623.80s, that'd be more likely to take us down into 623.67 to 623.55. Volatility index arguably targeting somewhere towards 1439, so maybe another 19 cents up on the volatility index. We'll see. All right, there goes the NASDAQ. NASDAQ is now sliding. It has hit 623.65. Come on, baby. Wow, the cry goes wild. Wow. All right, NASDAQ has taken out the lows and is now selling to 623.55. Target hit. Yay. Good job, everyone. We've now correctly predicted the largest traded technology ETF in the world. Yay. Good job. What a beautiful day. We predict the pullback to start the morning, the support of the pullback, and then predict that it's going to pull back at the highs and why, and then the target of that pullback. I mean, is that even supposed to be possible? I don't think so. I understand why they definitely do not want me on the homepage of YouTube. So yeah, there's the target for the NASDAQ. Well, at least that target. Things are always evolving and updating, but yeah, so if we continue to slide, then what we're going to do is we're going to use the volatility index as the target. So we'll take the markets down now as far as they want to go until the VIX hits $14.39. Because we don't know if the VIX actually wants to break out. And if it doesn't want to break out, then it's going to start topping around 1439. And we're going to use 1439 resistance on the VIX to then bottom the markets. So there goes the NASDAQ going lower. Next target's going to be probably 623.19s if we don't just miraculously bounce. And we still want to see that VIX up to 1439. That would be awesome, but we might just shy it. We'll see. Oh, yeah. I just locked some, I just closed the last little bit of an SQQQ trade. I basically went long SQQ for the NASDAQ drop there. So I didn't trade future in there. I was just taking a little long on some SQQ, but yep. Not bad. Not too shabby. Lame. So let's just kind of get something straight though so far. So even at, so like look at how aggressive that drop on the market was from the highs. And we still haven't broken out volatility. So think about that. Even that entire drop down is not enough to make fear break out in the market. So we still haven't entered what I would consider a fearful market. Now, obviously, there's someone sitting behind their computer screen right now that is fearful because they're seeing that big drop, right? So that's the kind of drop that psychologically can spread fear to an individual's mind. But when I look at that drop and I look at the volatility index, I do not see any fear in the market still. I mean, yes, it's a big drop, and I understand, arguably why we're dropping, but it's not for reasons of true, measurable fear based off of market metrics. Your psychology may tell you to be fearful, but market metrics haven't truly told us to really be fearful. Market metrics told us that there is maybe some fear will be coming to the market, right? So this is what we're seeing today is a maybe. So if there's maybe going to be an increase of fear in the market, should we be buying the markets up sky high long, or should we be pausing on the buy? Probably pausing on the buy. And if we're pausing on the buy, does that mean the market's going to keep running into all-time highs, or is it going to top? Probably going to top. Why? Because the market is telling us to maybe yield a bit. It's not telling us to take everything and just be screaming our heads off because we're scared, because that hasn't happened. But there is the possibility that fear may come because we can see increased hedging, right? That increased hedging this morning so far has been correct, right? Whoever was hedging volatility on the market, I would say was correct. Why? Because the market popped up and then just got slammed, right? So for whatever reason, people were hedging for some risk today. To me, they were right, because we had, a long going up and then it just got roasted right back down. So whomever out there was saying, I don't know about today, they were right. Because today was shaped up like, oh, damn, well, it looked kind of good, but now it's a little dicey. Hedging of risk, tailwind risk. That indicator was up this morning. So that's why I was basically saying, we can't be full-blown long bias these highs and whatever, because there's these somewhat mixed signals in the market today. Now, granted, we did not get the VIX up to the SMA target, which is fine. Oh my gosh, I'm so tired. Didn't sleep at all last night. Yeah, you guys get the point. Enough said. Man, where is... The crowd goes wild, wild. Okay, silver still cranking and banking. I mean, yeah, really what we want to have happen with silver, that's cool. It's lame. Sometimes the internet just sucks. But yeah, really all we want to happen with silver is the market to keep pumping all the way into 85, maybe as high as 100 now. That would be awesome. I mean, that's really all we can hope for at this point. Just to keep going up, going up. I'm kind of thinking, is it going to be a dippy? It is 10:12 in the morning. Oh gosh. Sorry, people. Just a little tired. Your brother over here just does not ever seem to get any good sleep, ever. Ever. Yeah, I'm trying to think about this drop today. It is a nice drop. I'm just thinking to myself. I'm like, holy smokes, look at shitcoin. I mean, it's fine. I mean, if we just take a VWAP, put it on, it's just hitting the VWAP, that's all. Ready? Doink. Like that. So it's to be expected. Take VWAP here, and then one on the low here. So that's going to be, so our current downside destination is there. And then what about here? Or do, interesting. So that makes targets down to here. Yeah, currently the selling targets for Bitcoin right now are pretty much those two green boxes. So, 86,000, 86,000 to, 85,000, 84,000 right now. Oh boy. Do. It's very interesting because even the last few minutes as the market's been dropping, the volatility index has almost zero reaction. Interesting. Very interesting. I don't really know what to make of that one yet. Obviously, we can see most of today's market movement down is built off the back of the Magnificent Seven. Again, all those are pretty much just pop and then straight down. So there's Bitcoin selling down as we kind of, again, it's got downside targets as low as, again, 86,000, 85, 84,000 right now. I was just about to do something. What was I going to do? Oh, yeah, that's right. Oh, my goodness. Oh, sheesh. That is one interesting looking distribution. Okay, now that's going to be below the 50 SMA. Oh boy. Tired. Oh, Bitcoin, a little bit. Huh. Yeah, I'd like to see that come down a little bit more. That would be ideal. Market with another beautiful pump. Yeah, that makes sense. And yeah, look at it works. Yeah, I gotcha. Yeah, that would have been cheap. That's a nice low of day bounce. As we kind of mentioned too, it's like even with that whole move, right? That whole move was going down, and it's not enough to break the market out on fear, right? So even that whole drop, the market really isn't that fearful of that drop, right? Look at that. If you zoom out, again, if you zoom out, the entire market is still in an uptrend, and the VIX is still in a downtrend. So Oh, yeah. All right. Well, to be honest, yeah, market's still in a buy signal. We've just pulled the market back today is all. That whole pullback was not enough to break out the volatility index, so fear is not really being spread in the market. Therefore, we wouldn't expect that the slide will continue, right? For big drops, you generally need to break out volatility. So what we would consider that is just to be a pullback, but not like a correctional move, right? So far we've pulled the market back today. Not enough to really spread extreme fear throughout markets to then break them down further, right? So we just kind of pulled things back to see if fear would be enough to break out. It hasn't been, so a lot of times that can also turn into a dip buy, which it arguably has. So this is actually a dip buy trade that you look for real quick. So let me just go back to this chart so you guys can remember this one. So this is a dip buy long bias trade that you look for when the market breaks down the 50, goes on an extended drop. We pull the market back so much like you saw today that the volatility index pops up to the 30-minute trend. If it can't break out, that a lot of times will turn the market into a big dip buy, because this really, at the end of the day, just becomes a continuation of the bearish trend on the VIX, right? So I would say a lot of what's setting up could be a resistance check on the VIX that turns the market into a bounce, which you're already seeing. But if it's legit and we do keep the downtrend going on the VIX, the bounce should be significantly more. So that is a trade that we look for in general. But yeah, anyways, I'm going to call it here on the day, about 35 minutes early from 11, but no big deal. Holiday weekend slow. I don't really have a whole lot more to say. We've already predicted the market pretty well. I mean, you could do a little better, sure, but we pretty much nailed exactly how the market was going to move today. Bottom, top, VIX, where the VIX would go, NASDAQ, S&P 500. So I think that's a pretty good job for the day. And I got some other work to do and meet some contractors and stuff like that. So anyways, you guys have a good rest of your weekend, and I'll see you back next week. Cheers.